and welcome to this masterclass discussion on financial crime compliance. My name is Brian Caplen, I'm editor of The Banker. I'm here with Tom Scampion, Global Risks Analytic Leader with Deloitte, and with Luc Meurant, who is Head of Banking, Markets and Compliance Services at Swift. And gentlemen, we've talked about risk assessment, but Luc, if I can come to you first, once you've done your risk assessment, you've then got to de-risk the bank. I mean, what are the challenges involved with that?
Well, and de-risking is clearly a hot topic those days. You see that in the press every week or so. It is a challenge because it's one thing to be willing to de-risk, it's another one to do that in an effective way. I'll give you a concrete example. So you see a lot of banks those days trying to get rid of some of their correspondents. Those banks that you're trying to get rid of, they don't disappear. They're still there somewhere in the financial system.
They've got to go somewhere, yeah.
They could, exactly. And what may actually happen is that you get rid of a bank, that bank finds another correspondent, which may happen to be a client of yours. So you end up with the same risk as you were trying to dispose of, but you are not able to monitor it any longer. So that's the whole issue of nested correspondence, quite a challenge. Concretely, what we are trying to do there is to bring much more transparency, again, leveraging the wealth of information we have at Swift. So we have come with this concept of what we call the Swift profile, by which we will propose to each Swift member to kind of compute a profile of their activities on the Swift network. And that will give an idea of the kind of nested activities, correspondent activities that they have. It will be up to each bank to first decide whether they want that profile to be computed, 2, whether they want to share it, and 3, with whom they want to share it. So transparency while respecting data privacy.
Okay. Tom, I mean, how do you see that this challenge of de-risking after you've done your risk assessment?
Sure. So de-risking in part is managed by the way in which we implement effective controls. And so once we are confident we've understood the risks, the residual risks to our organisation, we can make a call against our risk appetite and say, well, how confident are we that we can put controls in place that prevent some of the nesting issues that Luc, for example, was talking about, or other appropriate controls tailored to each of the risks. And ultimately, you can take a call that there are certain clients that are outside of your risk appetite. But I think the most important thing, Brian, is that you start with the concept of risk appetite. Because any de-risking exercise by definition is to say, well, we accept risk in the nature of doing business, but what level of risk do we accept? And once you've got a clear articulation of your risk appetite, you can then follow the process.
Because it is a very difficult decision, isn't it? Because if you take it too far, you could end up giving away half the business, and it's just going to come and be done by your competitors. Basically.
Well, the classic tension, of course, how do I work within a framework where I am confident that I can be as competitive as I want to be within that framework, but that the risks to my organisation are within my risk appetite. And I think a clear definition of the risk appetite and understanding what is allowable and what we are prepared to do as an organisation has to start the whole process. And from that point, you can then say, right, within that boundary, I'm going to be as competitive as I can.
Okay. Now, look, fundamental to this de-risking process is the whole business of know your customer, isn't it? So tell me how Swift can help with knowing your customer for banks.
Indeed, know your customer is a key issue today in the industry. So what Swift is trying to do there is to provide more efficiency in the process by kind of centralizing information on the various parties in a secure way, of course, and also richer information. I just mentioned the Swift profile, but also in terms of the quality of the controls on the information. The whole idea is to make sure that you can collect centrally information that can then be shared with the appropriate controls across the various banks, and high quality information in terms of know your customer.
Okay, and the banks have different ways in which they can take this, can't they? So, I mean, they can either sort of, use Swift or another alternative for all of it, or they can take parts of it. So can you explain to us how that would work?
Well, there is a big distinction to be made between the data collection itself and the analysis that you do with the data. What Swift wants to do is just to cope with the data collection issue. We don't want to get into any judgmental activities, and therefore the banks will, based on the data collected by Swift, take their own decisions based on their own risk appetite, as Tom mentioned.
But what you're doing is you're acting as like a utility service for the bank, yeah?
Correct. So we are a central utility that collects and checks the quality of information on the various banks active in correspondent banking.
Okay. And there's definitely a tension with the fact that there is an inefficiency in asking everybody to do this multiple times when actually a utility provider with appropriate controls about how it actually performs that service would be a great advantage to the way in which we address compliance issues.
All right, let's come back and talk about utilities in just a second. Thanks.